We're seeing what some people might call capitulation. Do you think this is what capitulation looks like?
Look, these are very fast-moving markets. I have to think sort of what is the impact of algos and sort of, what part of this is human, what are folks really doing in the last, few minutes of trading, and what's the impact on markets. Over the short run, you could sell all you want. I agree with the last guest that fundamentally things do not change over the last couple of days. I think that we fundamentally misjudged the amount of volatility that was going to be in the marketplace. We spent 4 weeks saying nothing matters but faster economic growth. Then suddenly something else mattered, and that was going to be on the interest rate front. And that will help define the bottom. If you simply don't see higher interest rates and you don't have a lot of the fears that were generated come true, you will have lower asset prices and you'll have better returns.
So we need to see some sort of bid come into the bond market in order to get people comfortable. Is that what you're saying?
We saw that, and we saw yields come down this afternoon. What I would want to see is that's going to have to be tested. If share prices start to stage a comeback, how far is the sell-off and the impact? Again, this is price discovery. It was very, very clear that with the Federal Reserve allowing its balance sheet to shrink by $400 billion, with larger budget deficits, with international investors having to take U.S. dollar foreign exchange risk, they're a big part of the bond market. We're going to have to negotiate, the price of bonds. We're going to have to negotiate yields and what the impact is on other financial conditions and other asset markets. So I think it's going to stay a bit volatile for a while. But again, the thing that I need to see is that ultimately we are not going to have some crushing bond market sell-off, and I really doubt that we will.
We could chuck a load of things in here as potential catalysts for what we saw, higher Treasury issuance going forward, the data that we got, the wage data in particular, the shift higher rates,
picture of Bitcoin,
earnings. Chuck a Bitcoin picture in there. Yeah. But also what's quite fascinating to me is the shifts lower that we saw in Europe as well. I mean, the stock 600 down 4.6%, I believe, perhaps even more in the last 6 sessions. For all the optimism that we're talking about and the relatively lower valuations in Europe, has anything changed there too? Because look, that for me is interesting.
I think some of the better performing asset classes that are fundamentally well supported, what we saw in emerging markets thus far has been really mild on the downturn. What we've seen in Europe, again, we have some issues. We have Italian elections, we have German coalition issues. We were not up as much to begin with. But those are closely aligned markets with U.S. equities.
I was about to say that we don't mind about those things while U.S. equities are rallying. But the moment the U.S. equities sell off, then they become issues.
Well, they're issues over the short run. Are they going to be issues over 12 months? Usually they're an issue over about a month. You see very high correlation. What I think you're going to find is that we will separate asset prices. We don't look like this market every day. And how far it goes down, you tell me. But this speed of this kind of decline, you cannot keep doing this day after day after day, and without finding some sort of, impact and some sort of bottom rather quickly. We found it, I think, pretty fast, on the way up, how far it could go, and it was very, very robust. And I think that you'll find that it's very quick on the way down here that we find our bottom.
How do you know when we've reached capitulation? What will you look for? Do you just feel it, or are there concrete signs?
Really high volume selling. Lots and lots of ridiculous options trades, for example. People buying protection for 50% down, those sorts of things. Those would be useful
Max
signs.
Concern.
Those kinds of things.
Well, I'm looking.
But it's all relative to, again, what are the spillovers to credit? So far, it doesn't look like this is very potent at all on the credit side. So those are the types of things where, the problem is that we rallied an awful lot very, very fast. We were doing a 100% annualized return in January, and that's very, very quick too.